here it is. So other factors which we can see here is that there is 200-day moving average located at 1.2635. This line is going down and is providing resistance for the currency somewhere around here. Also, we can see that on the daily chart, at the beginning of the last week, the pair has formed a lower high and now is closed on Friday firmly below the support levels of 100-day moving average and 50-day moving average. These lines are currently acting as resistance located around 1.2420, and below this level the pair should be vulnerable for a decline to the support line, which is currently located near 1.2150. Here we may also apply Fibonacci instruments to the chart in order to find further support levels. We can see that the support level we were talking about, 1.2365, actually corresponds with the 50% Fibonacci retracement of the advance in pound which we witnessed in May. Further support located at 61.8% FIBO. It is located in the area of 1.23, and also we have 1.2216 here, while resistance is located above 1.2420, located at 1.2450. Here we can also draw a resistance line, and of course the picture is more difficult for the bulls than for the bears right now. If we look at fundamentals for the pair, we should point out that economic data out of the UK were disappointing. The UK manufacturing PMI came short of markets' expectations. UK industrial production figures declined, and the nation's trade deficit has widened. Friday's US labor market report was a bit controversial with soggy NFP headline and jobless rate increase, but still jobless rate decrease, but still the market after all viewed it as more positive than negative. So next week we will receive this week we will receive UK inflation figures on Tuesday and labor market data on Wednesday. Upbeat economic releases will allow the pound to recover to some better levels. In case of disappointing data, selling of the pound will intensify, and we know that the US data will be of importance here as well. As the official Brexit process is finally underway, market awaits a formal response from the European Union on the terms of its separation with the UK. And as we don't expect many news about Brexit in the coming days, the pound's value will depend on the UK economic fundamentals. So the idea is that as there will probably be nothing from the Brexit issue in the coming days, then UK economic fundamentals will be the main driver of the pair. If they remain negative, if they remain weak, when levels of 1.23 and 1.2216 are quite attainable. If the fundamentals from the UK are good and there is some disappointment in the US data, then the bulls will try to test higher levels, try to test resistance. But at this point, the downside scenario looks looks extremely more likely, as I can put this.